In the world of emerging tech, venture capital plays a huge role. We have seen the rise of some of the biggest and most successful technology companies from the portfolios of VC firms. Still, much of it is shrouded in mystery. But today, we are going to be digging into venture capital, so stay tuned. Hey everybody, welcome back to another Future Tech video podcast. The audio version of the podcast is available on Apple Podcasts, Spotify, and most of the others, or you can find it at futr.buzzsprout.com. Today, we are going to be talking with Saqib Awan, a partner at the prestigious venture capital firm Lightspeed Venture Partners. Lightspeed is known for its investments in companies like Snapchat, Grubhub, AppDynamics, Epic Games, Rubrik, Nutanix, Zscaler, and MuleSoft, to mention a few. And Saqib is going to tell us how it all works and fill us in on where he sees the tech markets going. Welcome, Saqib.
Thank you for having me.
Oh, thanks for being here. It's so exciting to have you on. So, Saqib, tell me a little bit about who you are and, what Lightspeed Venture Partners is. Okay.
Yeah, absolutely. So, I'm a partner at Lightspeed Venture Partners, and really my role here is to create this bridge between the practitioners, the corporates, the CIO, CTO, CISOs, and Silicon Valley. Because I know there's a lot of hunger and thirst for new technologies and emerging technologies. But a lot of the times, CIOs don't necessarily have avenues to engage and to collaborate and to discover new technologies. And so that's essentially what I do. So in some ways, I am the Chief Innovation Officer at Lightspeed on behalf of CIOs as well as our portfolio companies. And I've been here for 6 years, and I've been having a blast doing this. For the past 6 years, I've been able to build a network of over 1,200 CIOs around the globe, and I've been fortunate to work with hundreds of startups and founders, Lightspeed companies, and outside, and in the process, help generate over $1 billion in savings for our CIOs around the globe, because as a result of the engagements that they've had with some of our portfolio companies, but also other emerging technologies and companies as well.
Yeah, you're sort of a unicorn in cost savings.
I never thought of it that way, but I like it.
I'd go with it. I mean, unicorn's a big, powerful term there. So, I mean, it's awesome to hear what you do, but give us a little bit about who you are. Like what motivates you, what drives you. What's that Saqib story?
Oh, that's a big question. I think. I've learned a lot of different things through different experiences, right? And I think some of the best life lessons that I've learned have been hard fought and come from sports, actually. So maybe I can share a story with you.
Sure.
So when we just immigrated to Canada, so myself and my 9 siblings and our parents, living in a small apartment in our little community. We were all eager to meet new people and make friends. So when the opportunity to participate in our local community's annual overnight camping trip came along, I jumped right in. I was like, yeah, absolutely. I'm going to go in and make some friends. And I remember I was really into soccer around this time, right? This is the age of Maradona, and I had grown up watching and idolizing him. And there was a soccer tournament at this 3-day camp. So I knew immediately that I wanted to play. But there was one problem. I didn't have a team. And some of the other kids had been practicing and preparing for this competition for months, if not the whole year. But I was determined to compete, man. So I went out and I canvassed the entire camp and pulled together a team of kids who all wanted to play, but also didn't have a team. So our ragtag team of misfits enters this tournament as probably the biggest underdogs in history of summer camp soccer tournaments. And miraculously, we kept winning. What we lacked in skill and practice and maybe chemistry, we more than made up for in our determination to win. And we made it all the way to our championship game. Now, the opposing team had a coach. They came from a more affluent neighborhood. They had been practicing together for a while. And they even had soccer shoes and uniforms. So they were legit. But this was just the extra motivation that we needed. So I took our team aside, gave them a little bit of a pep talk, told them that, hey, we had to work harder than them in every single way. Every loose ball was everyone's responsibility. We're going to play defense and offense, and everyone was going to do it. And we're going to clog up all the lanes every single time and just confuse them. So now imagine, amidst the growing crowd that's getting louder by the minute, we play our hearts out and end up in a tie. So now we're happy, we're jubilant, we're disappointed, we're exhausted, and we have to go into penalty kicks. So my team nominates me to be the goalie for the penalty kicks, and we go back and forth, and it comes down to the final kick by the opposing team's captain. And I kid you not, his name was Saqib. And to me, he's this 20-foot tall boy with a golden boot, and he kicks the ball, and I just remember diving to my left and closing my eyes. And the next thing I remember is I felt like I got punched in the face by Mike Tyson, and then I blanked out. So as I open my eyes, I see my teammates running towards me like, "Hey!" So that's when I knew that we had actually won the tournament. So this ragtag team of misfits had beaten all odds because we refused to give up and worked harder than everyone else out there on the field. And that actually has become one of my most important life lessons. That if you can put together a team that is driven by a common mission and that has a strong will to win and a work ethic to boot, you can do anything you put your mind to.
Well, I think it speaks to the importance of execution, and I guess you're now you're the bad news bears of investors.
Well, hopefully not. I think I'm fortunate now that I've gone from having a ragtag team of misfits to now actually working with
an elite team now.
Elite team of executives from around the world and investors. So it's been.
Well, maybe you find some
journey.
bad news bears companies that you can invest in that just are like they're rough around the edges, but they're going to get it done. I love that idea.
Right. Oh, with all your brothers and sisters, you have a soccer team right there.
That's right. That's right.
Wow.
Where are you within the nine siblings?
I have 3 older sisters and 3 younger sisters, and then 2 older brothers and a younger brother. So I'm kind of right in the middle. Yeah, I'm right in the middle.
Yeah, you're the peacekeeper in the family then, right?
There you go. Yeah. The negotiator and the peacekeeper.
The negotiator. Well, that'll serve you well in your job here, right? Yeah. So tell me, I think one of the things that especially outside of the Valley, there's this incredible mystique around venture capital, right? I mean, I think there's a lot of fantasy, some reality, but I don't think a lot of people really understand what it is that venture capital is and how it actually works.
I think oftentimes you're right. There's a bit of a mystery and mystique around it. But the reality is that it's just as difficult of a job as any other job out there. In some ways, it is a sales job, right? In many ways, it is a relationship job. The goal for us is to always be on the lookout and go out and find and build relationships with the next generation of entrepreneurs that are going to be building disruptive technologies that are going to change and improve the way we live, the way we work, and the way we do, all kinds of different things. And so that's really what the challenge is. And at a very early stage, which is where Lightspeed really got its start, it's really difficult, right? Because you're often investing in a team with an idea, right? And then you have to believe in that team's vision and intuition, but also their resilience and tenacity to be able to go out and build something that didn't exist before. And that's where it's very fun and rewarding. But I would say, a lot of our time and our investors' time is spent out in meeting entrepreneurs, folks that have interest in starting something or are thinking about starting something. So a lot of it is actually just out there hustling and meeting entrepreneurs.
Yeah. So, obviously you guys have a lot of money to invest. Where does that money come from?
Yeah, great question. So it comes from many different sources. So the way venture works is we, just like founders and startups have to raise money, venture capital firms also have to raise money. And so we raise money from what are called limited partners, LPs for short. And these limited partners can come from any number of sources. These could be institutions, these could be endowment funds, universities, some sovereign funds, some larger organizations, and in some cases, it can also be very wealthy individuals or family offices. So each fund is different. Each fund has a different makeup of LPs. There's also these things called fund of funds that are essentially collecting funds from a number of different sources themselves and then investing in venture funds, private equity funds, whatever else the case might be. But yeah, there's and the cycle, unlike maybe not too different from a startup, we also have to go out and raise on a somewhat regular cadence of 2 to 3 years, because every fund that you raise in venture capital, you invest out of that for the 2 to 3 years generally, and then you go out and raise another fund so that you can continue investing out of that.
So, so tell me, how do you guys actually make money? I mean, it seems like there's a lot of potential revenue streams for you guys. How do you guys make money?
Yeah, so we make money when there is an exit. So we get paid to pick the best horses, so to speak. And if that horse that we pick from the stable ends up winning the Kentucky Derby, that's how we win. So essentially, when there's an exit, either in terms of M&A or if there's a public exit, such as an IPO. And so generally the way venture capital will work is, so as I said, say if you get $100 from a limited partner, they will come in and we'll raise that, we'll go out and invest it. Now there are some management fees of running the operations and paying salaries for people like me, right? So that's usually between 2 to 3% of the assets under management that you raise from your limited partners. And then the rest of it, you go out and invest in multiple startups, right? And a typical fund, again, it'll depend from fund to fund, could invest in anywhere between, say, 10 to 70 startups. And then really what you're looking for, what you get paid for as a venture capitalist is to make the best bets, make better bets than others, and really try to be able to identify the next unicorn that you sort of spoke of earlier, the next company that will inflect, the next App Dynamics or the Zscaler or the Nutanix or the MuleSoft, et cetera. And so when there's an exit, then what happens just in terms of like that $100 math, you take the first $100 and give it back to your limited partners. So your LPs are made whole on that money. And then now say if you 5x'd it, so you turn that $100 into $500, you've got $400 remaining after you return the first $100. So the remaining $400, 80% of it, so $320 would go back to the limited partners. And the 20% would be what is called GP, general partner carry, that goes into the fund and gets distributed as essentially the VC's reward for investing and investing well.
Yeah. It's funny because, I think when people first think of VCs, they imagine these enormous operations with all these people, sitting around on computers doing, complex things. But, when the first time I ever went into a VC's office, I was like, wow, this is a lot more modest than I thought it was going to be, and there's not as many people and it's not as chaotic and, all that. So there's sort of this vision of this just massive machine, but I think it takes really well-connected, smart investors and a small, it's kind of a small group of people that make it all go, right?
Yeah, it really is. Yeah, it really is. It's it's a small operation in terms of number of people, even if the assets under management can be pretty significant, and that makes sense, right? Because you're out and about, like you can't scale relationships, right? You have to build relationships one-on-one. And that's what you do. That's what the business is. And that's why venture is a long-term game, right? So, I mean, I've been in it now for 6 years, and being able to build those relationships one by one now continues to pay dividends throughout on both ways, right? So yeah, I think generally speaking, venture firms are not very large operations. They tend to be small and concentrated, and you generally have a back office, right, and accountants, and now more and more you're starting to see platform plays of being able to help companies grow in many different ways, and business development, innovation being one of those angles. But even still, these are generally pretty small and nimble organizations.
I want to touch on something you mentioned, Saqib, idea of a platform, right? And your sort of role in the company is really centered around that. And I think one of the things that's interesting is a lot of when you look at the venture firms, they all kind of have a different character, right? I mean, there's some that are just like they spend a lot of time incubating just a few companies. There's some that they just put money into a company and kind of just watch it grow, right? And then then there's kind of where you guys are, where you have a lot of investments, but you have this platform group that's supporting these companies. Could you speak to what that is and what the value of that is?
Yeah, absolutely. Again, you're absolutely right. There's different flavors and different philosophies and different cultures, and I think it's a good thing. Diversity is great. What we think about when we make an investment is that we're in it for the long haul, right? So we want to be hand in hand with the founders, with our teams that we're investing in. And so, we think of it as almost, we think of it as founder success. We're helping our founders succeed each step of the way. And really, when you think about platform services, the goal for us, at least at Lightspeed, is that the things that are repeatable, the things where we can provide you leverage, you shouldn't have to spend your time trying to do, right? So whether it's trying to figure out how do you do equity distribution, how do you hire the best people, how do you onboard them, how do you go in and find your lighthouse customers and talk to CIOs, how do you pitch them the right way? These are all things that a first-time founder has to learn, but we have seen them dozens of times, if not hundreds of times. And so that's really the idea behind platform services, is to see where we can essentially help accelerate the journey that any investment that we make. And now, again, lots of different flavors to it. For us at Lightspeed, it really means being hand in glove with our founders as much as possible. Now, we still want them to fish on their own, learn how to fish, but we will certainly, also be there supporting them, encouraging them, showing them how to do it, and making sure that it's done the right way. And in many instances, also help them catch the fish. So as an example, right? So with the role that I have, as I said, I'm the chief innovation officer in some ways at Lightspeed. I am helping our portfolio companies, our founders, get access to customers, to CIOs and CTOs and their team members. But it's done in a way that is actually mutually beneficial, right? Because we're only bringing in a startup to a certain CIO if it's relevant for that CIO. If they have a problem that they're trying to solve and they're looking to see what the emerging technologies are. So it's really the adage of we're facilitating a purchasing behavior rather than trying to sell anything in. And that's when a win-win happens. And unless you have somebody like a Lightspeed helping you with that, it's really difficult to bring those things together. I think you guys have tried to do that yourselves with the with the roles that you guys have. But that's incredibly valuable to a CIO, because especially nowadays, there's a ton of noise. There's a lot of different startups trying to solve the exact same problem. And so how do you sift through that? How do you diligence all of them? It's a really difficult job for a CIO. So it's a win-win situation if you can create this in the right way for all the stakeholders involved.
You're seeing a lot of these unicorn ratings, right? The unicorn valuations, unicorn. Like, what is really the value of being a unicorn now? Because it seems like maybe this is just my perception, and I think Chris would agree too. It's just you hear it so often now, so it's like, where's the what makes this so special now? Is it a $10 billion company now? Do you have to be 10 billion to be, seen?
Yeah, it needs to be revised upward.
Yeah. Well, I mean, what's your thoughts on that?
Yeah, I mean, I think that just really is an indicator of how bullish everyone has become on technology, right? Because of the central role technology is playing in everything, right? From the way we live, the way to work, the way we socialize, to the way we eat out, and do anything and everything. And I think really COVID re-emphasized that, right? And I think that's why you saw a massive pop in NASDAQ and tech valuations. And so really you're seeing sort of the ripple effect of that into the private markets, where there's a lot of obviously liquid capital that's flowing in, and so in some cases valuations are perhaps a little too frothy. In other cases, you could argue that maybe they're not so. So the value of being a unicorn was that unicorns don't exist, right? It's a fantasy world. So once you reached $1 billion valuation, you were a unicorn because you had achieved something. And to your point, now valuations are getting really high in many instances, and so there are a lot more unicorns. So maybe there's not something as special about them, perhaps. But I think it still really is an indicator, though, of the traction, the progress, and the potential for that startup, and the team that they've built, and the conviction that investors and the markets have towards that. I think historically, if you look at the public valuations of tech companies and compare them to private valuations, they've actually been pretty close. So the VCs, the private market is actually pretty good at valuing companies appropriately. And in many cases, in fact, in the last year, you've seen public valuations pop significantly more beyond private valuations, right? And so I think yeah, there certainly has been a lot more unicorns, but it still is considered a milestone in terms of maturity of a startup and what it means for everybody involved.
So, you bring up an interesting topic, the valuation side of these companies. How do you come to a valuation? I mean, it's so, some of the dynamics of that are so opaque. It's like, but to your point, you're kind of getting it right when you go to the public market. So that you must be doing something pretty good there. So how do you come to these valuations?
Yeah, so that's also a complex question in the sense that it differs, right? So if you have two co-founders in a garage with an idea and a dog, that's very opaque to try to figure out how do you value them. Now there are some guidelines. You can look at what are other companies in similar stages. What's the TAM, total addressable market for this potential idea, and you can come to some sort of a level. But very sort of vague at that stage. And then as you mature more and more, then you can actually become more rigorous around it, right? So we started out as an early stage investing shop only, and now we do investments across the globe, across all stages, and across many different sectors, right? From healthcare to consumer to enterprise. So as you get more and more mature, there are comps that you can apply. There are metrics that you can look at based on where you are in terms of your traction, your revenue, or whatever the appropriate metric would be for that specific sub-industry, and how others have fared. But at the earliest stage, it's very difficult, right? So oftentimes, it's really the market dictating in terms of if you really have a incredibly hot product and incredibly strong team with incredibly good traction, customer traction, then it's likely that you're going to have multiple term sheets from many different VCs who all want a part of that pie. And if that happens, then your valuations can skyrocket because everybody's essentially bidding each other up, right? And so, the closest analogy, although it's probably not an appropriate one of an auction, but it's essentially the market deciding what the value is of that startup. But as you mature, there's more and more metrics along those lines. But I can tell you the best way to get traction, to get your valuation, is to have traction, customer traction, right? In enterprise world, it means getting you guys to go out and help the startup with customer
Yeah.
access. So the CIOs and the CTOs become incredibly important in that equation, right? Because if you think about, you could have the best of breed product, you could have the best of breed team, but you and I know that often it's not the best of breed that wins.
Right.
It's the ease of integration, ease of use. It's like, what do I have to pull out to bring this in? How would this fit into my environment? So CIOs really, they hold the purse, right? They hold the keys to a success of a startup collectively. And so I think, the IT executives, especially the early adopting ones, play a very crucial role in this entire ecosystem of venture capital and how valuations come together and which startups succeed and which ones
Totally.
don't.
I mean, we share similar interest in that perspective, right? Just like how you're trying to get, CIOs to adapt to emerging tech. That's what Chris and I, this is our passion, right? Is just to meet as many startups as we can, find the winners and then get them introduced to the customers. The challenge is this, for me as a salesperson, I can either sell millions of dollars of Cisco and everyone's buying Cisco, so I can go and do a sale there. But if I get $1 million for a startup, that's a big deal, right? And so it's usually maybe going to be 200 or 300. So how many am I really going to have in order to make up for some of the volume of the big boys? And so, which has been, I've had this debate with many people, right? And ultimately, it comes down to me is this is where the value is, right? And you and I and Chris have talked about, the valley. The valley is this small, right? It's, the small little part of the U.S., and then there's everywhere else. And so I think evangelizing more of these things is really, really important, and just getting it to customers, because you're right. We need customers, and customers know best. The customer. That's
the only thing that matters.
That's right.
At the end of the
if
day,
they say, I like this for this reason, or I don't think it saves me money, or this is too difficult or whatnot. And it's not even really always at the CIO level. Sometimes it's at the practitioner level where, you have a technologist that's hands on the keyboard that really has to deal with these problems. Those are the folks that Chris and I try to get to share with us so we can actually see what problems they have and fill those gaps.
Yeah, no, I think you're absolutely right. And, I'm sure you guys are aware of the technology adoption curve, right? And there'll always be laggards and skeptics and, the late majority. But I think the critical piece in that adoption curve is really those innovators and the early adopters, right? Collectively known as the early market. That's really what's the most important from a startup journey perspective, but also from a new technology and adoption perspective. And those people, I know those people, right? And those are the folks that I think really sort of move the cheese if they wanted to, or keep the cheese flowing, right? And I think collectively customers, the buck starts and stops with customers. And it's especially those early adopting customers that are extremely critical in not just figuring out which startups are going to win, but also really in a way clearing the path for the rest of the market on who's going to win and who's going to adopt. To your point, nobody lost a job, right, for going with an incumbent. But nobody also got a competitive advantage by going with an incumbent. And so I think more and more the job of a CIO today is to be out there and looking for new technologies that are emerging. And I think the innovation piece is a big sort of hairy, audacious goal for everyone. Mm-hmm. And I just tell every CIO that I work with is no matter where you are today, push yourself 15% beyond your comfort level. And this is actually a great principle that I learned in my business school in a class called Touchy-Feely by Professor Carol Robin, who actually has a book out now. So I'll give her a little bit of a plug. The book is called Connect. If you ever want to learn how to build great relationships with people, look it up, Connect by Carol Robin. But anyways, the concept is in terms of interpersonal relationships, but I think it can be applied very easily to innovation. The idea is, we have our comfort zone, and then there's a danger zone outside, right? We'll never go into the danger zone, but just right outside our comfort zone, there's a 15% sort of innovation experimentation zone. So make yourself a little bit uncomfortable, but try going beyond what you're comfortable with. So that's really my message to the CIOs is that if you are not engaging with any startup at all today, engage with one. Make it a goal in 2021 to just at least go out and meet a few startups, find one that you think would be interesting, and maybe do a POC. If you've engaged with one or two, maybe try to expand out your aperture a little bit more and go out and engage with some VCs and see how they do things and become part of their networks. And, so really wherever you are, you can go just 15% beyond where you are today. And you'll be amazed at how that compounds in terms of your ability to engage with new technologies and new startups. So Sandesh, my message to you will be the same. Go 15% beyond your comfort level of engaging with maybe one more startup that you bring in instead of working with an incumbent. And if that becomes your next rubric or your next Nutanix, you'll be in a pretty good shape, right? To
absolutely
to benefit from that significantly.
Absolutely. So being out of my comfort zone has been the theme the last year and a half. With especially with COVID and just the curveballs that were thrown. That's why we started this podcast, right? It's
an awesome idea.
I did, yeah. So thanks to Chris, right? Chris is the one that really pushed me towards it. But when he first said, like, hey, we should pivot to a podcast, I'm thinking, yeah, right. Like, what do we know about
Talk
podcasts?
About comfort zone.
Yeah, that's right. That's right. Well, you guys look very comfortable, so that's good.
Well, but I don't want to drop that because I think what you just said is just really quite profound. I mean, I think it's sort of that DMZ of comfort. You got to kind of live in that a little bit to really make those significant advances. And I think that 15% message to a CIO is a great one because I think that is a lot what's missing in some companies. It's just that little bit more. Let's be a little bit more innovative. Let's be a little bit, and it sort of goes with that bimodal IT thing that Gartner talks about and all that. And I think, in every aspect of our lives, that little 15% of buffer is probably a really great thing to try to tackle, right?
Yeah. And candidly, that's quite a bit of the work that I do with the CIOs that I work with, right, around the globe. It's all about getting them and their organizations just 15% beyond where they are. And we've seen some magical things come out of it as a result. So, yeah.
So, one of the big things that you guys do is look for these companies and find these great companies. What is it that you look for? What are the things that tell you this company is going to be a huge success?
Yeah. So I think there's when you look at venture, it's really three things. Now, I will caveat it with that there's no magic 8-ball, and if there were, every single one would be, a rubric and a Nutanix and a MuleSoft, right? But there's really three broad things in venture that you're looking for. First is this the best team to build this, right? Then the product. Is this an incredible product that can't easily be copied? Is there a moat that can be defended? And then last but not least is the market, right? How big is the market? And what potential does this have? From that perspective. So now, you can dissect each one of them into different things. So at a very, very early stage, it's really about the team. Do we have conviction in these founders? Do we have conviction that they will be able to build and attract the right talent to build a world-class team? Because we know regardless of whatever they're working on, there'll be multiple other competitors that are essentially going to try to do the same thing. So do we have incredible conviction in this team and thinking that this is the best team in the world to build this thing? And then will they build the best product in the world? And then as you start maturing and start having a product and you build a product, then it's all about the market. And the market is, don't get me wrong, the market is important at the beginning as well. But the product may pivot and, the market becomes really critical when you're really trying to look for product market fit to see, is this something that is actually going to work? And I think this is where the rubber meets the road. And this is where that early market of CIOs that I mentioned becomes critical, right? Because that's when you essentially get your validation of like, yes, this is amazing and I should keep building it and we're getting validation, or it's not. And what we often see is that when you build a great product and you're getting validation from the market, those CIOs become enthusiasts. Right? Your lighthouse customers become your biggest fans. So they then also start going out and evangelizing on their on the behalf of these startups. And because you're an early adopter, in most cases, as a CIO, you're also pretty influential and have a good network of other CIOs that look up to you. So that becomes a force multiplier for a startup in terms of getting access to more customers and sort of just snowballs from there. So all three of those components play a very sort of intricate dance with each other at different stages. But it all comes down to the market at the end of the day.
Yeah. Well, and one thing I have noticed, and Sundish and I talk about this all the time, is that, and it was one of the big things that we look for. You talking about team. One thing we've noticed is that it's a lot of people who've been there, done it, that get, more money, right? And they tend to go back and tap the same teams. And it's funny because we see a team that, was hugely successful at Pure, all of a sudden they're, over at this other company, and, they kind of all move together, and it's these proven teams that keep showing up at places. And when we see that movement happen, we know there's something going on, because those guys are also very savvy about the market, and they're savvy about startups, right? So they know something when they see something, right? And so that's a big motivator for us, and to like what we take a look at.
Yeah, absolutely. And I think let's unpack that a little bit as well, because I think there's actually different components to it. So to your point, absolutely. It's in enterprise IT in particular, and obviously that's the audience here. So in enterprise IT, you have to have experienced the pain, right? Mm-hmm. To want to build something to solve for it. So, you could build a great consumer product in a dorm room, and it just picks up and it becomes huge through virality. But you can't really do that in enterprise in most cases. It's like you have to live the experience and pain, and then want to solve for it. And then oftentimes you get frustrated. So to your point, first, yes, a lot of the times it's actually either the CIOs themselves or their teams, or the team member that goes on and solves for a problem. MuleSoft is an example of that, right? ServiceNow is an example of that. And then most recently, Uncork, founded by the co-CIO of MetLife, Gary Hoberman, or Tekion, founded by the CIO of Tesla. So yes, you have to experience the pain. So that's where enterprise differs a little bit as well. And by the way, this is also where the early adopters have an edge now, right? Because they are the ones most likely to either think of these things or have team members that they've attracted that are going to be building these next big great companies. So that's one angle of it. And then, yes, the other part of it is around, the folks that have built this and been successful, they have had an exit, and then they go out and want to build something again because they see another problem. And if you've been successful, or if you're a good manager, or both, hopefully, you will be able to attract these people to come back and work on something different, because they've been in the trenches together. They've seen it before, and they know what it takes to build a company. So that becomes pretty incredible. And this also goes back to what we were talking about. How do we find them, right? How do we go and source these deals? So this is where relationships come in and are incredibly important, because oftentimes it could be that we've known somebody for up to a decade before we actually invest in them, but we had to have known them for a decade. So a lot of the relationships actually are longitudinal in nature for that reason as well.
Yeah, I think that's that both explains a lot, and is a great strategy, right? And I think the other interesting thing about that is you have people who are executives in companies, or maybe they rise to the level of executive in a startup, and then they start the next startup. And then after they start that next startup and have a successful exit, now they're, they become partners at a venture firm oftentimes. So it's sort of the life cycle of a successful, entrepreneur, I guess, right?
Yeah. I mean, I think there's, all of those things are possibility. And, but it all, at the end of the day, comes down to relationships and being open to possibilities and trying new things and experimenting with technologies. Yeah.
So tell me, what do you see as some of the big growth areas? Like what kind of markets are you guys tracking, and what are you looking into? Where do you see things popping, in the next 5-10 years?
Yeah, and that's the beautiful thing about IT and technology in general, right? In enterprise IT, things are constantly evolving, constantly shifting. I remember not too long ago, as I'm sure you guys do, where people started questioning the role of a CIO because, well, geez, everything's going to be on the cloud. And, what do you need a CIO for? Well, now we know that we absolutely need a CIO. And so I think on the enterprise IT side, and I'll keep focused on that part here, is that, I think lots of opportunities. Look what COVID has done, right? All of a sudden, overnight, we had to shift everybody to work from home or hybrid environments and make sure that everybody had the infrastructure that is secure and they've got the networks and all of those things. That's created massive opportunities in a lot of different ways, from productivity to networking to obviously security. So I think all of those things are massive opportunities for investment. Security, obviously, needless to say, everybody knows about and is becoming more and more important, even if there's more and more noise in that space. Productivity, pretty much everybody that I speak to believes and thinks that we're not going back to the way life used to be. There will be some sort of a hybrid type of an environment. And so what does that mean from a productivity perspective? How do we create these serendipitous interactions between people? How do we, what's the next competitor to Zoom? And we're already starting to see a lot of interesting technologies in this space that are coming out. So I think that's going to be another huge angle of things. And then just more broadly, I think enterprise IT, the infrastructure, cloud, edge, all of those things I think are going to continue to evolve. And data and analytics and lots of interesting things that are happening in AI and analytics. So very exciting time to be in technology and enterprise IT.
Well, it's another thing that Sundish and I keep seeing from companies that are coming up. This is like particularly in markets like security market and things like that, where we see as old as the market is, it's not in many ways a very mature market, right? And there still needs to be some consolidation in that space, right? And one of the things that we see over and over is products that come to market that aren't so much products, they're more features, right? And they lack sort of the rest of the stuff to make them a real platform or real company. What's your take on that?
So some of that I think is by design, and some of that is that it's just the way it is. And, VCs aren't M&A experts or, we invest in great teams with great ideas at a startup stage and then let the market kind of, dictate who wins and who doesn't. So oftentimes I have this conversation with CIOs about like, oh, well, geez, well, it would be great if you pull this security, feature together with that security feature where there's like multiple, and then combine them. It happens naturally, but that's not really, the wheelhouse of a venture capitalist. Now, by design, it happens in some ways because for you to be really successful in technology, you have to be focused, right? And if you look at some of the most successful companies in the world that are technology companies, they started out as a very small niche product, right? Whether that was eBay with these, folks that were really into antiques and collectibles, or even Facebook that was just for college students, initially at Harvard and then beyond, and then exclusivity around that. And then they spurn out into a platform and they become bigger and bigger. So I think it's the same approach in enterprise IT, which is you should be the best widget in X, Y, or Z. And once you can have that, then you sort of grow out of that and then you build a platform into it. Now, not everybody can, not everybody gets there, but the most successful companies will essentially end up having platform solutions.
So, well, and then there's the opposite problem too. We see a lot of as well is where a company builds a platform and they have no unique use case to sell to. And so they don't do any market segmentation. And so they've got this big unwieldy beast that they try to take to market and it doesn't resonate, right?
That's right. And that in some ways can be the worst death because you built the platform and, you have this vision and again, the market doesn't resonate, right? So again, the critical component here is the market. It'll always be the customer, the voice of the customer.
And it's unfortunate too, because you see some of these companies they have a great product and they do actually solve some problems, and they have a great team, but they fall apart in sales and marketing. You have this great widget, but you can't explain it. And if the consumer then can't understand it and it's not simple enough, then it's a shame because your product could have worked for them. But, sales and marketing has been a challenge, I think, for a lot of startups.
No, I agree 100%. And I think that is actually one of the big things that I work with our entrepreneurs on, especially at an early stage, right? It's like selling into corporate America is a different beast on its own. And especially if you are an enterprise, if you're a technical founder, which most enterprise founders are, and you're a first-time founder, you may never have sold anything into a CIO before. So being able to speak that language, being able to take this incredibly complex and might be the world's best widget that you're building, but translating it into what would resonate with the market.
Yeah.
A lot of my time is spent working with entrepreneurs and founders on that piece exactly.
Yeah, it's like why would they care, right? Why does a customer care about your product, right? And especially when some of these founders, this is their baby. They've been working on this thing, right? They're so attached to it emotionally. They'll say the customer doesn't understand. Like the customer doesn't understand it. It's like, well, I think that they do. It's just, you're not explaining it well, right?
Well, and I think that goes to where that maturity and experience as a leader comes in really handy, right? Because you have to be savvy enough to go, well, as much as I believe in this, the market doesn't believe in it, so we got to pivot here, right? And change our direction. And that's got to be really challenging for you to work with some founders who, maybe don't have that vision.
Yeah, I mean, I think yes and no, and I think generally, we do actually want founders to have a conviction, right? We want them to believe in something so much that they're risking everything to build it, right? So of course we work with our founders, we coach them, and we're lock in step with them. But at the end of the day, it is the founders, right? They have to decide where the company goes. And they're building it. We're there to support and be along and be helpful. But ultimately, they have to make the decisions on where it goes, and the board as well, which is more than just a single VC in most cases. Right. But I think it all makes sense. I think really what we're talking about is sort of this: how do you bridge the gap, right, between this incredible product that you've built with this incredible team that you have, and now bringing the market along with it. So again, in that sort of, and for anyone to be successful, if you think of these as three concentric circles, you have to hit the bullseye, right?
Yeah.
Nutanix has done that. MuleSoft has done that. AppDynamics has done that. Zscaler has done that. Rubrik has done that. They're all in that bullseye. Exabeam has done that. And a lot of other portfolio companies have done that. But that's the challenge. You could be, if you're in two of those three, it won't be an exciting exit.
If it was easy, everybody would do it, right?
Yeah.
So tell me a little bit, what's next for Lightspeed?
Yeah, well, we're going to continue to invest. We are a global platform now. We have over $12 billion under management. We recently opened up offices in Southeast Asia, in Europe. And we've always had presence. Well, we've had a presence for a long time now in India and China and Israel. So a truly global platform. And we believe technology and entrepreneurs are coming from all over the world now. Silicon Valley will still be Silicon Valley, but especially with COVID and dispersion of talent and this, what I call the Zoom boom. The next wave of startups isn't necessarily going to be concentrated in one geography or another. So to be successful, you have to be where the entrepreneurs are, where the founders are, where the executives are. And I think we are well suited for to be where the founders are from that perspective. So we're a global platform. We invest across all stages. I encourage any and all of your listeners who are listening and have an idea they're working on or interested, or even interested in just learning about Lightspeed and our CIO Innovation Network, share my email with them. It's Saqib@lsvp.com. Would love to engage with them and see. But yeah, we're excited about about where the world is heading from a technology perspective. We're already there. We're living in a technological world. Everything is dependent upon technology now.
Yeah, I imagine there's going to be a lot more need for VCs going forward with all the technology that's being built right now.
Yeah, I don't know about the need for VCs. I think we're going to need more and more entrepreneurs. We're going to need
maybe it's a supply versus demand or demand. I'm not sure which way that's going to go, but so that's what's next for Lightspeed. What's next for you?
I love what I'm doing. It's been an incredible journey for the last 6 years, working with our founders on one end and then these executives on the other end. As I said, I've kind of graduated from a ragtag team of misfits playing soccer to working with incredibly talented founders, folks that I learn from every day, and their teams and the executive teams. That energizes me. But I'm also energized by working with CIOs and the problems that they're facing. So I think I sit in this beautiful intersection of the possibilities and the reality. And I enjoy that. I enjoy that angle of it, and we'll continue to play in that space for as long as I can.
Yeah. Well, and you just had a big life change in that you moved out of the Valley, and there's a lot of talk about that right now. Could you speak to that a little bit about being outside of the Valley and what that's like?
In a nutshell, back in June when we were starting to all shut down, we were in a small apartment. So unlike what you guys were saying about the big houses and the stables earlier, we decided, and Lightspeed went virtual like everybody else, or remote. And so we just decided, hey, let's pack our bags and explore a different part of the world, different part of the United States. And so we moved to Dallas, a little bit outside of Dallas, traded in 800 square feet of living space for 3,800 square foot of living space with a big backyard and a nice front yard, and have been enjoying it. And I think, at a more broader level, you've seen it. Now, our move may or may not be permanent. We'll most likely move back, but it's been an awesome experience and experiment to try something different. But I think more broadly, you've definitely seen that, right? In Silicon Valley, in New York, and some of the more populated areas where people have just left in droves because they wanted more space, they wanted to enjoy life, and especially now with remote work, you don't need to be in high rent condensed areas. So I think some of that is here to stay. Is here to stay. I don't think everyone will go back to the big cities and live, but big cities also offer a lot of great things for people, right? Especially for young people. So I don't think it's the end of San Francisco or New York or Boston. People will eventually go back, but I also do think that people will also stay out and enjoy this, especially as hybrid work and remote work becomes more of a reality. Because as much as we hate the pandemic and all that is done to us and society and personally in life, I'll tell you, I enjoy not having a commute.
Yeah.
I enjoy being with my 3.5-year-old daughter for dinner every night and for breakfast every morning, and I enjoy not having to get on a plane all the time, even though I actually like traveling, but it's kind of nice not to have to get on a plane all the time. And I think more and more people are going to realize that. So, so it's been a fun experiment. Loved it. Just the Southern hospitality is real. If you guys have never spent time in the South, it's been awesome. I'm glad that we did it.
Yeah. Sandesh and I have spent a lot of time in Dallas. We have some customers out there that we love and visit as much as we can. So it's a cool place to be. I want to just say thank you so much for coming on and demystifying venture capital, and we've thoroughly enjoyed working with you in the past, and look forward to working with you more, and hopefully we can help bring you some CIOs to really move the ball forward on some of these companies. But I just want to say thank you so much for being on and everything you've done so far, and look forward to the future.
My pleasure. Thank you for having me. I've enjoyed working with both of you over the past few years as well, and you guys are two of my favorite people in the whole ecosystem. And candidly, I love what you guys are doing. I think this, by the way, is a perfect example of being innovative, right? Going 15% beyond your comfort level. So I love the fact that you guys have pivoted very quickly into a podcast and still being engaged with startups and VCs, even though, it's not necessarily part of your quote unquote day job. So I applaud you for being innovative on that and being at the forefront. But yeah, love being here. Enjoyed spending time with you, and to any of the CIOs out there who have an interest in engaging with VCs, with other CIOs who are forward thinking and really sort of at the top of their game. I'd love to engage with you. You can reach me at Saqib, SAQIB at lsvp.com. And thank you again for having me. Look forward to listening to your next podcast.
Awesome, man. Thank you so much for the kind
Saqib.
words.
Yeah,
truly appreciate it. Thanks for watching. If you like what you saw, click on that like button, hit that subscribe button because that helps the channel a ton. And if you want to get notifications, click on that bell icon and you will be notified when there are new videos. And I will see you in the next video.